Good morning. Good morning from Los Angeles. Welcome to Power Hour. Welcome to Friday. Hope everybody's Halloween was good. Um, I live on a street that famous for passing out high-end candy. So yeah, there had to be 10,000 kids out here. Beautiful. It was kind of chilly evening, but everybody survived, I think. And so hope you all stayed out and safe, had some fun, and back to business today. So welcome to Power Hour. Every Friday, 10 a.m. Pacific, 1 p.m. Eastern. Glad to be here. Hopefully, a bunch of you join, and we'll talk about important things such as finance, such as the economy, such as the elections in a couple days. I voted already. My ballot is about to go in, and I will be wearing my little label or whatever you want to call it, sticky that I voted. Make sure you all vote. That's the only way. The only way we can attempt to change things in this country, where I think things are really going sideways at the moment. Good morning to everybody. So let's take a few minutes of taking care of business. Thank you for the support. I appreciate it. The channel is growing. Part of it is because we're putting out good content, man. Really. I mean, we're talking about the current issues. We're talking about some evergreen issues. We're talking about investing. We're talking about how to save money. We're talking about budgeting. A lot of things we're talking about is what I do in my own life, how I run my household. And I think, look, I'm not saying it's perfect, but everybody makes mistakes, but you learn from your mistakes and you move on. And one of the reasons I started this channel is because I want to not eliminate, but I want to reduce the mistakes you guys are making if you happen to be trading, if you happen to be investing. Again, none of this is investing, trading advice. I'm not supposed to do that. But with that disclaimer out of the way, so let's take care of some business. So I am live every Monday and Friday. Mondays are called Trading with Sergio, 10 a.m. Pacific, 1 p.m. Eastern. On Fridays, it's called Power Hour because I talk quite a bit about the economy and then what happened during the week. So it's kind of Monday, Friday bookends kind of a thing. The other thing, those are going to continue indefinitely. So please share the link. If you're not subscribed, please subscribe. Turn on notifications so you can get notified of these live streams. That's one. Number two, what I've been doing for the last 2 weeks now is every Monday, Wednesday, and Friday, latest by 2 p.m. Pacific time, after the markets close, I am posting my positions on the YouTube channel's community page. So if you feel like tagging along, by all means do it. However, there's a disclaimer there. It comes with a disclaimer, as always. The reason for that is I may have just bought and sold something the same day, and then if you just see it and then the next day you transact on it, I may not even have that position. So there is a delay, obviously. I mean, I cannot be live 24 hours a day of what I'm doing. So October ended. So that's on the YouTube channel community page. So Monday, Wednesday, and Fridays, go check it out. It's there. How do you get to the YouTube community page? You go to the YouTube channel, my YouTube channel. Towards the middle, there are tabs. They go, I think, in this order. They say video, shorts, live. You just swipe left on the right hand. On the last tab is called community. When you click on it, you will see a screenshot and my comments about my positions. That's the second piece of business. Third piece of business, we are increasing our membership. If you want to support the channel, by all means, more than welcome. There are two ways you can support the channel. One is watch the content, obviously. Join the live streams, comment. Please put a thumbs up or like. Supposedly, it helps the YouTube algorithm. Another way is becoming a member of the channel. Now, what do you get if you become a member of the channel? Well, I think you get a lot more than what I'm asking for as far as in return, as far as monetary compensation. Again, I'm not doing this for monetary compensation, but then channel has to run. There are costs to run a channel. And Chris is my YouTube manager on this channel as he is on the other one. He's doing a great job. So to Chris's wife, in case he's watching today, they are expecting their third child, and it's imminent any day now. And I wish her Godspeed. I wish her the best. I wish Chris the best. He's becoming a daddy for the third time. And, other than health and Godspeed, I can't do much. He's in Buffalo. I'm in LA. And hopefully, everything goes well. And what we do is wish him the best. Please wish him the best individually. Chris and the wife, hopefully we'll have a healthy baby to announce shortly. That's the other part of business. But going back to the membership part, if you do become a member, members get few things. Obviously, they get more hands-on, one-on-one interaction with me because we did our third, actually, this past Wednesday, a couple of days ago. I do members-only live streams twice a month, every 2 weeks. So that gives them time to settle. That gives them time to understand. And obviously, at the start of the YouTube channel a few months ago, I recommended some books about technical analysis and option trading. Please, it's a small investment, $20, whatever they are. Go buy the books, start reading, start educating yourself. The only person that can help you is you. Obviously, I'm here to hold your hand for a while. But my purpose of doing this channel is to get everybody out of that rat race that they're involved in and teach them about, inform them about investing, long-term, short-term. You have to do it. There is no bad time to start something. Okay. A lot of people go, well, I don't know anything about it. Well, here you are. Just pass it along, learn. There is no bad time to start investing. Okay. I always say this. It is paramount that you take care of yourself. Government's not going to do it. Okay. Most of you, when you retire, 65, 67 years old, Social Security may not even be there. Look, I'm 57 and I don't think Social Security, I'm hoping it's there, that I get my money back somehow. But the system is broken every which way possible. Federal government is broken. It's just broken with what they're doing with the national debt, which I could talk about it non-ending. Okay. And it's not about politics. It's about finance. Finance doesn't mess with politics. And, it's black and white. It's numbers. You can't fudge numbers. And so on the member side, wonderful, actually, members only live on Wednesday. It goes about an hour and a half or two. They learn quite a bit. We adjust our charts, what we're looking at, so we're on the same page, kind of. Look, education-wise, it's not going to. You guys are not going to catch up to where I'm at, but what it will do is it will give you a chance to ask me any question you want, one-on-one, basically. You have access to that. And the other thing that we started doing last week is, you guys see the shirt that I'm wearing? It's black and gold and white. I think it's hot. It's fire. Is that what the youngsters call these days? So if you are a member or decide to become a member, Gig With It, which is the official merchandise supplier of the channel. And what I'm doing is, if you do become a member, as a perk, additional to the 2 live streams that I'm doing for the members only. By the way, those are every 2 weeks on Wednesdays, 3 p.m. Pacific, 6 p.m. Eastern. Now, email me if you can't make it, because I think we have 15, 16 members. Thank you, Keith. I appreciate it. Thank you, buddy. So if you do become a member, you will get a t-shirt free. This is super high end. You can wash it a million times. Nothing will happen because it's made in-house. We print it in-house. It's not like, from overseas. That's some garbage, merch you're going to get. So if you do become a member and choose to become a member, email me, Sergio@sergioavedian.com. we will send you one. We will send you a free T-shirt. And so on the members only live, everybody wears this shirt. I think that's pretty cool. And it's not just for that, obviously. It's an awesome looking shirt. You can wear it when you go out to do whatever you're doing, because this is what you have to live by. You got to know your worth, not just in the stock market, not just investing, in life. Everybody should know their worth. I think a lot of people do not know their worth, and then just stuck in a box, and they just, day to day, week to week, month to month. That's not a way to do this. So I'm going to try to help all of you to get out. And on the members, it's cost free, by the way. There's not even shipping cost. All you have to do is email me, Sergio@sergioavadian.com, what color you want. I think they have black. This is black, navy blue, and there's some other colors. Go to the website, gigwithit.com. Pick out your color. Obviously, send me your T-shirt size, right? And send me your physical address. In a week to 10 days, you will receive the T-shirt cost free. That's another perk of becoming a member. As you can go on the website and see it, the T-shirt costs $29.99. So I'm hoping you stick around for a couple, 3 months so I get my cost out of it. But don't do it because of the T-shirt. Do it because you're going to get immense amount of positive information and good information, correct information out of those members only lives. The next one coming up, let me see. The last one was Wednesday, which was the 30th. The next one coming up is going to be on the 13th of November. Okay, 3 p.m. Pacific, 6 p.m. Eastern. I'm urging all the existing members, please show up to these. What I'm doing, so the members only live is not like this. Okay, it's super interactive. The way I do it is I put out the StreamYard link. Everybody grabs the link, comes on. So we have like 10, 15 people talking to each other, exchanging ideas, asking me questions. It's like a corporate Zoom call, like, figure it's something like that. And so, if you choose to be a member, support the channel that way, much appreciated. Again, subscribe, turn on notifications, thumbs up. It helps us do things properly. And okay. So I'm going to answer all the questions. Please shoot all the questions. I'm also going to read all the comments after I share my screen with you guys, my positions, what I'm doing today. Again, please go check the community page. Okay, every Monday, Wednesday, and Friday, latest by 2 p.m. All my positions are there. So full transparency here. I'm not hiding anything. And lastly, October ended yesterday, as we know. October was, I looked at my numbers afterwards. October was the best month of the year for me. I've had some good months this year, like May was great. But October happened to be the best month. I practically couldn't take a wrong step. Okay. So, did really, really well. Account was up close to 30% actually. Hoping to continue the momentum going forward, finish a year strong. My account, my actual trading account, not my little Robinhood account. My Robinhood account is up like 120%. No, actually more, 180%. My actual trading account is up close to 200% at the moment. I will share that with you all as well, like I did before. I'll put without the account number, obviously, but then, I'll do a quarterly update on that. I have nothing to hide. I'm not embarrassed to have success, and I'm also not embarrassed to show losses. And I've had a drawdown period this year in the summer because my bias was negative and it hit me. But then what did I do? I survived, and then account equity is a new high. The reason for that is you just cut your losses, and you don't push, you don't revenge trade, you be patient, you wait for your spots, and you do things properly. And October was one of those that it happens once in a while. Everything lines up. I see the picture so clearly. It's like a basketball player, right? Shooting 3-pointers and the basket looks like 8 foot wide that I can't miss. But then that's always a good sign and a bad sign. The good sign is that, yes, profitable month. But then the bad sign is those don't last. Okay. Then suddenly out of the blue, overnight, one day, that 8-foot rim will become an 8-inch rim and you can't hit a shot. And that's when you need to see the momentum change. It hasn't happened yet, but when it happens, I'll back off a little bit. I won't push it because money is not made easy. It involves a lot of stress in trading, and I don't want to give anything up. So with that said, please put all your questions, stock ideas, whatever it is, in the chat. I will hit them each individually at the end of the episode. So I want to talk about 6 topics today. The first topic I want to talk about is yesterday was a bloody day, and yesterday was wonderful for me because I had puts, as you guys can see on my positions. I'm always kind of messing with puts on the indexes because I think the market's topping or somewhere in that range, and this week was a pivotal week, right? All the 5 out of 7 Max 7 earnings came out. Couple were good, couple were horrible. Well, not horrible, but the price action was horrible. Earnings were fine. Then today unemployment numbers came out. Economy is slowing down, but there's something very, very, very spooky going on, which spooky is the right word for Halloween, but there's something really weird going on, and I'm trying to make sense of it because honestly, I've never seen it in 30 years of me doing this. Never is a big word. I have not seen this. Okay. And I'll talk about that, in a segment shortly. So I'm trying to read the tea leaves correctly. My bias is negative. It's, either way, I think, plus we have massive, obviously event coming up, elections on Tuesday. Again, please go vote. Don't say, my vote doesn't count. Your vote counts. You have to vote. Look, I'm an immigrant. I voted every single time after I became a citizen. Here it is. Here's my ballot ready to go right there. And I'm gonna once that goes in, I'm gonna wear this proudly, right? So you need to go vote. And okay, so let's go to the topics. The first topic I'm going to talk about today is the market at the top, right? I've done a lot of topics regarding this. Yesterday sure looked like a top. It broke an uptrend that I by the way, when you guys see my charts, I don't draw too many lines on my charts because it creates too much bias. But it broke an important uptrend actually yesterday, and today we're bouncing back as the first day of the month. But you guys got to be careful with this market. So I don't want you to be holding the bag. I don't want when they pull the rug, which they will. When I say they, obviously institutions, hedge funds, trillions of dollars sloshing around. When they do pull the rug, I want you to be ready, and I want you to be able to make money because the market goes up the stairs, and it takes the express elevator down. And yesterday it took the express elevator down. Luckily, I had puts to protect my long side. I am quite balanced actually. When you guys see my positions, and I'm always probably 50% to 40% of the account is always in cash to look for opportunities. But the other important thing is I am making sure that I don't get caught, right? I don't get caught with a rug pull. And that's why I trade in and out quite often out of those puts, index puts, because I'm more inclined to on equity or calls. I need to have some sort of balance. And when the rug pull comes, like it did yesterday, out of the blue, right? The puts will protect you. In fact, it will make you money. But then you can't marry puts because market has done wonderful. Last year, it's up 40%, 44% actually. It made, 45 or 46 all-time highs this year. So the trend is up. I mean, you can't argue with the market, right? Market's going to do what it's going to do. You just got to trade what's in front of you. And I've done that really well in October. Hopefully finish the year strong. And so as far as is the market at the top? I don't know. I mean, market now definitely with yesterday's massive downside move. Today we'll call it a dead cat bounce. It's kind of bouncing a little bit. And the first of the month, obviously, institutions take some positions. We'll find out. Look, time will tell. All the signs are there, of a top, right? All the signs of overvaluation are there. And based on current market trends, it's not definitely considered a top. But then, I see the cracks in the system. I'm seeing it. And maybe after the elections that will happen. Maybe the first of the year it's going to happen, because there is a lot of tax ramification that goes into these markets too, by the way. So, everybody has profits on the market, right? If you bought an index fund last October, you're up 40%. Well, if you sell it now, you're going to pay taxes coming April in 4 months, right? Hopefully long-term capital gains taxes or short-term capital gains taxes. Well, if you wait until January and sell it the 1st of January or 2nd of January, 1st of January markets are closed, now you don't have to pay the taxes on that capital gain for at least 16 more months until April 15th of 2026. So I'm kind of, seeing a little bit of a turbulent future coming up, and elections obviously are going to affect a lot of it. I honestly, I don't think I'm going to talk about in a segment who's good for the markets. It's pretty neutral, really, when it comes to that. But I'm sure volatility is going to be increasing in the next week or so. And that's pretty evident with what's happening with the volatility index, VIX, right? I told you guys about that a while ago. Please watch that. Its symbol is VIX. So at the moment, there is no definitive signs that this could be considered the top, okay? And the indices are continuing to hit all-time highs. But there are growing concerns, obviously, about potential overvaluations, particularly in the certain sectors like technology. And we know what happened to Microsoft this week. We know what happened to Meta this week, right? We know what's happening with Apple now. They look shaky. The charts don't look that hot to me, although they're pretty close to their all-time highs. So, I'm not calling it a final top. That has to happen. We need to have a drawdown, we need to have a bounce, and then we need to roll over for that to take place, and that's not happening. For a short period in July it happened because of the yen carry trade, and we know how violent those could be. Nasdaq pulled back 15% in a matter of 3 weeks, 2 weeks, 3 weeks. That's a lot. But you guys hopefully will listen to me and learn and protect yourself. And will there be a correction more than a bear market? Yeah, obviously. There's always corrections, but then over long periods of time, market does nothing but go up. Is it a top? No, there's no top. The charts are still up. The trend is your friend. But as investor or traders, right, you should monitor key indicators and remain cautious. And I'm always cautious, right? Because I don't know what's going to happen tomorrow. I'm trying to actually buy things that are outperforming, and which I've been talking about for months, such as Carvana and Kava and things like that. And, short things that are not hot. And believe me, you can make more money and faster actually on the downside than you can make on the upside. And so I'm going to actually read this part is, the key points to consider for a top is this: market performance. Major indices like the S&P 500 and the Dow Jones Industrial Average are currently experiencing sustained upward momentum, correct? Dow Jones is up 500 or 450 points today, and same thing with the SPY and triple Qs. However, you have to pay attention to rotation, right? Not every stock goes up because the market's going up, right? Market's going up continuously does not mean your individual stock is going up unless you own the ETF. Then you're fine. That's why passive investing always beats kind of active investing. Not in my case, but in 95% of the cases. Dollar cost averaging is something I recommend. Set it and forget it. Market has done well over 10% return over the last 100 years. Can't argue with that. That's average. That's down years and up years. But what I do pay attention to is sector concentration, not only that, but sector rotation, because not every stock will do well all the time, right? So there has been this AI boom going on. If you played that game for the last year, you did much, much better than the market did, right? So you need to pay attention to sector concentration. You need to pay attention to individual rotation. And that's what I try to do. I've learned that quite well over the years. What's hot? Why do I need to be? And that's the only way you can beat the indexes, okay? Obviously, there are valuation concerns. There's no question about that. The market at the moment, as an index, S&P 500, is selling close to 26 times PE. PE is price to earnings ratio. That's as close as the top as you can get as far as that number is stretched, right? So you need to pay attention. The historical average is about 16 and a half, 17. Interest rates have a lot to do with that. Now that the Fed is cutting rates, it may justify the 26 PE. But the other thing is the forward earnings estimates on the indexes are massive, right? The index this year is going to earn about $215 on S&P 500. Next year, it's supposed to, the estimates are 275. So that PE ratio is going to shrink as the earnings keep coming through, and the PE ratio will shrink, right? But there's a big but there. The but is, what if we go into a slowdown? Why is the Fed cutting rates? If we do go into a slowdown, those earnings estimates will start getting reduced, and then that 26 PE looks extremely high to me. And last but not least, Federal Reserve policy. Okay, so Federal Reserve keeps gaslighting the whole nation and say unemployment is fine. Well, it wasn't fine. Today, unemployment came out. It was horrible, horrible numbers. And but then market doesn't care, right? And we're at all-time highs. Look, all asset classes, Bitcoin, gold, silver, stock markets, all of them are at all-time highs, and Fed is cutting rates. I don't know. But the problem with that is that, though, the day they cut the first time, and in November, they're supposed to cut rates again by 1/4 point. And when they first cut it 50 basis points or 0.5%, I don't know, last month, what happened? Since then, interest rates have shot up. Literally, interest rates have shot up. And today they're going higher. Mortgages are higher than when the Fed cut the rates. Why? See, this is the first time when I said I've never seen this before. Fed is lowering rates, but the Fed is not big enough for the bond market. The bond market is saying, Fed, you're full of S. We're not buying a word you're saying. You're going to bring inflation back by cutting the rates. So something like stagflation can happen. The ugly S word, not the 4-letter kind. And they're testing the Federal Reserve here. Federal Reserve says we're going to cut rates. We're going to go into QE, quantitative easing, but the bond market saying no, no, no. And the way you can look at that bond market, look at the long-term interest rates shooting up since the day they cut it. They have done nothing but go up. So we'll see. Is it a top? No. But am I keeping my eyes and ears open for for a turn? Absolutely. And so that's it. That's the first topic. The second topic I'm going to talk about is, look, this is not a political channel. I know you all have political views and are going to vote, but instead of making it a personal thing, right? Think about it, right? Look at the history and look what's going to happen. Who's better for the markets, Republicans or Democrats? Okay, there is history, right? You can look at every 4 years of a presidential run and figure out, where things stand, right? So according to Kobasi Letter, my hat's off to Kobasi Letter. I love them. I follow them on X. Please go do the same. They have amazing, amazing information that they put out. I look at their information religiously now, okay? I'm on X. You can follow me there at Sergio Aved. I'm pretty active there for both channels. And I put a video out last week how to trade the elections through DJT. DJT is Donald J. Trump's media company stock. Extremely volatile. Do not follow me on that one. What I'm doing is extremely extreme. It's not complicated, but it's very risky. And I want to make sure you guys understand what I'm trying to say here. Trading the elections through DJT is it will give you more white hairs than you need. So but I did put out my strategy, and so far it's worked beautifully, but you guys need to be really, really careful with that. The other way you can trade the markets is through Kalshi. Kalshi is like a betting site. Look, I'm not going to do any of it, but a lot of people are doing it, and according to that, Kamala Harris is showing a comeback last week or so. Trump and this is the betting line, actually, the red line and the blue line. Red line obviously for Trump. Trump's odds of winning for 59%. It's closed down some more. Actually, it's down to like 53, 54%. As I was looking at the betting side before we came on, and Kamala's is up to like 47%. So the race is tight. Supposedly Trump had a 20-point range. Lead. I don't know. I think the race is pretty tight, especially in key swing states. And so who's better for the markets then? Okay, so Republicans or the Democrats? Forget Trump or Kamala. Well, first of all, whoever's going to win the House and the Senate, because the president, I think, is powerless. I think what the president, I mean, they have veto power, obviously, but other than that, who makes the laws, right? People who are in the House and the Senate for 30 years, 20 years, right? And you can see the same faces for 30 years, these 80-year-olds running the country in the Senate, specifically in the Senate, because they have no term limits, right? They can get reelected, 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 reelected. You know, an 80-year-old deciding, talking about AI, we have no idea what's going on, right? How to protect our country from the perils of AI potentially. And then these people are just there forever. And I think they should have term limits, personally speaking, the senators especially, because I think those 100 senators are running the country. In general, the market has actually, a lot of you may think that the market has done better under Republicans because Republicans are more fiscally responsible, let's say. Not so. Republicans, you know, a lot of you may think that Republicans cut taxes, you know, it's better for the markets, they're deregulate, that's better for the markets. Not so. If you look at the history of Democrats versus Republicans, the lead is in the Democrats. Whenever Democrats are in the White House, the market does a little bit better. I'm not talking like massive amounts. What I'm trying to say is that whoever's in the White House, the market always has done well. If you look back 100 years, the market's average return, yes, it had, you know, the 2008 GFC where the market fell out of bed by 60%. Yes, it had the COVID. Yes, we had the, you know, dot-com bubble. I mean, we have these things every 10, 12 years, some black swan events as well. Doesn't make a difference. Whoever's in the White House, if you sit there, buy an index, dollar cost average, you're going to do extremely well because the average return is 10%. And whoever's in the White House, you know, I studied this. I looked into it. I thought the Republicans would have done better for the stock markets, but not so. Democrats have a little bit of an edge as far as what the general market does. Now, do you own the general market? You can through ETFs like spiders and triple Qs, but a lot of people don't, unfortunately. What they do is they go chase stocks, right? So if you own one stock, market could be making all-time highs and your stock could be going down every day. It doesn't make any difference. So that's why I kind of highly recommend highly recommend that you guys just invest through ETFs, unless you're at my level, where you can find these nuggets or, you know, needles in haystacks. Then you can outperform the general indexes, right? So final word on this, Democrats are better by a small margin over the past, you know, history of stock markets. They both had periods where markets have swooned, you know, took a dump. But overall, if you look at it, Democrats in the White House, I'm not talking Senate or the you know, House, are better for the stock markets, although the average is about 10%, if you look at it on a neutral basis. Okay, so yeah, and I was actually surprised about that too, because I thought Republicans would be a little bit better, but they're not. Look at the last 4 years, Biden and Kamala, market's up. Previous 4 years, market was up until COVID happened, right? So irregardless, whoever's in the White House, the markets are doing well, and you should be participating in there. So the third topic I'm going to talk about is the job market. Jobless claims came out today. The Fed keeps saying gaslighting. I know why they're cutting rates now, because I was kind of questioning myself why they're cutting rates, and the job market is not doing well. If the job market doesn't do well, what happens? Right? Less tax receipts go into the treasury, because half the treasury's income, by the way, comes out of two things. Half of it comes from, obviously, W-2 taxes that, you know, you get a paycheck, you get the deduction going. About 20% actually comes from corporate taxes. And the other half, I mean, the other 30%-ish comes from capital gains taxes. Okay, so if Jeff Bezos sells $5 billion worth of Amazon, which he did last month, he has to pay taxes on that. He has to pay like $1 billion in taxes. So that's where the money comes from. So market staying high helps those tax receipts. So that's why But the other reason Fed is cutting rates is they're seeing the jobless claims and they're seeing the unemployment numbers and they're not liking it. So they're trying to preempt a massive slowdown that's coming up, if not a recession. But job openings fell by 420,000 in September to 7.44 million, the lowest since 2021. As you guys can see, Kobesi Letter always backs up their claims by charts, and pictures are worth 1,000 words. Look at that chart. That trend is not good. That actually topped early 2021, right after the pandemic, and then that number is going down. So that's the jobless job openings, right? So less job openings, less opportunity for you if you get laid off. Now, if we go in a slowdown or a recession, U.S. available job vacancies significantly missed expectations of 8 million. They did, and today's numbers, did as well. I mean, look, unemployment is going to be something we all have to deal with. If you do have a W-2, make sure your ducks are lined up. You have some rainy day funds, because what the W-2 of 20 years ago is not the W-2 today. So, and the data has not been revised downward in 15 out of the last 20 months, the highest frequency in the last 15 years. So jobless claims keeps going lower, and the unemployment number, as you guys know, the way they gaslight is they bring out a number and next month they go revise it down. We had a massive unemployment revision a couple of months ago that I talked about. They literally miscounted 800,000 people. I go like, how do you miscount 800,000 people when it comes to unemployment, right? Well, they do it because they need to keep the just pump going, right? And they gaslight, and then they say, oh yeah, we need to revise. And then, all of you, by the way, should be familiar with FRED. FRED is a person's name, obviously, but it's an acronym for Federal Reserve Economic Data. If you Google FRED, you will see all these things, all this data, economic data that they bring out, right? The St. Louis Fed, New York Fed, Cleveland Fed, they're all there. All the region's economic data is public view, public information. There's nothing to be hidden there. So go visit FRED. Start making, get a clue of what's happening in the economy, and it could be in your area, right? So because the economy in the West Coast is not the same economy as in the middle of the country or the East Coast. So, go visit that site. It's called FRED, F-R-E-D, Federal Reserve Economic Data. But the job numbers are not looking good, and that's one of the reasons Fed is cutting rates. They're foreseeing some things that they may like. But as the Kobesi letter says, the U.S. labor market is deteriorating. I agree, 100%. So that's deteriorating, right? What else is deteriorating? I mean, inflation is not going anywhere. This week, PCE numbers came out where Fed watches PCE more than the CPI. Those are not good either. Those are not coming down. So Fed is cutting rates while the inflation is kind of persisting, okay? And if you look at all the asset classes, they're just telling you the completely different story, right? All asset classes are at all-time highs, from stocks to gold to silver to Bitcoin. The only thing that's not doing that is oil. Oil is actually going lower. So oil going lower is also a bad sign. Oil is a good predictor of the economic strength, right? So that's also a bad sign. I mean, we have like a Middle East war, potentially. Oil's going down. Why? Because demand is not going to be there if an economy slows down. So there are a lot of tea leaves for you guys to read. I'm going to read them for you, explaining to my best of my ability, but you guys should start paying attention to what's going on as well. So that's the third topic I'm going to hit. The fourth one is about Bitcoin. Bitcoin is almost made an all-time high at 72,000 and change. We're back to 69,000. So I've been talking about this guy forever now. Well, forever as far as this channel is concerned, 4 months or so. We all know who Michael Saylor is, right? Hopefully we know who Michael Saylor is. He's a genius as far as I'm concerned. And he is CEO and founder of a company called MicroStrategy, okay? It's a public company. I've been talking about this forever, so you guys can go check the old content, obviously. And so earnings came out this week on MicroStrategy. MicroStrategy stock has been amazing, better than NVIDIA, actually. And I quite often talk about the strategies that I deploy to trade some of these things. I own Bitcoin. I think everybody should own some Bitcoin, not YOLO kind of thing, or FOMO or HODL or any of that, the acronyms. My my personal assets, I have about 7 to 8% in Bitcoin. I have not increased it. I've been holding it. I'm going to hold it forever. Why am I going to hold it forever? Because, and I will increase it at some point, because the US government is gaslighting you and telling you that inflation is running 2-3%. It's not. It's running about 6 to 7%. That's the only protection you have, by the way. How do you protect yourself against debasing of the US dollar? How do you do that? How do you do that? You guys tell me. You know how you do that? Now you guys know why all asset classes are at all-time highs. To protect yourself from inflation, okay, you need to be in hard assets. And I'm urging all of you, please, please, please share this video. I did a video with a gentleman named Sonny Poe. The video is on the channel. We released it last week. It's under Insiders of Wall Street section of the channel. And you guys need to watch that video to see what he's doing for his financial freedom, what he's doing against this currency debasing that's happening, what he's doing to protect himself from debasing of the US dollar, because US dollar is losing 6 or 7% of its value on a yearly basis. So please go watch that, and what he's doing with Bitcoin and what he's doing with his credit cards. I mean, it's a fascinating interview. Please go watch it. You'll learn quite a bit. Is it something everybody can do? Probably not. But is this something you need to pay attention to? Yes. Should you own some Bitcoin and take it in a cold wallet, take it off the exchange? Absolutely. So Bitcoin hit 72,000. That's about 69, 70, somewhere in that range. Look, I did a video last week saying, is this a top to fall off of, or is this the next leg up? Bitcoin has been going sideways since March or April, for close to 6 months now. Well, if I'm a technical trader, right, analysis charts, it looks like a base to take the next leg up. Next leg will be 120,000 on Bitcoin. When, I don't know, but when it does break out, it's going to get there. So about Michael Saylor, through MicroStrategy, MicroStrategy is the largest Bitcoin corporate holder on the planet. They hold about 255,000 Bitcoin with an average cost of, I think, 37,000. And how does Michael Saylor do it? Michael Saylor issues through his company, okay? He issues corporate debt. He issues convertible bonds with less than 1% interest rates and buys Bitcoin. He's done it 3 times in tune of $1 billion each. Well, during the earnings call, which I was listening live, my mouth fell to the floor. A lot of people think this is mortgaging his company. This could end very badly. I'm not going to make a judgment on that yet, because I'm still trying to grasp what this guy is doing. I think what he's doing is brilliant. I mean, is it going to work out? I don't know. So he said, we have a 21-21 plan. I'm going like, okay. And by the way, MicroStrategy is outperforming Bitcoin. MicroStrategy was $130 a share like a month and a half ago. It's $240 a share, while Bitcoin has not made a new high yet. Now I understand the game here. I really do. So MicroStrategy has become a Bitcoin surrogate. So I'm not telling anybody to go buy MicroStrategy, because there are a lot of analysts on Wall Street saying that, well, MicroStrategy's Bitcoin holdings are 16 billion. The company is worth 35 billion. It shouldn't be that much, because the company, MicroStrategy, is not worth $20 billion. I get it. I get the point. But I think they're missing something here that Michael Saylor is what he's doing, he's been doing, he's going to do. So he said, we're going to issue $21 billion in equity and 21 billion with a B in debt and put it in Bitcoin. So I'm going like, that's a lot, by the way. Not only that's a lot, but what that does is that puts a floor at Bitcoin, right? I mean, if one entity is going to buy that much Bitcoin, and we know there's a finite amount of this thing. That's why I like Bitcoin. That's why I think fiat currencies are trash. The US dollar is trash, toilet paper, okay? And that's why I think you need to be in hard assets. And that's why at the end of that interview with Sonny Poe, which you all please should go watch, it's only 30 minutes of your life. Even listen to it, okay? He said something that hit me like, not too many things surprised me, but when he said that, he goes like, I was like, say that again, and you guys will see it. And he said, don't slave harder, okay? Save in harder assets. Let me say it again. don't slave harder, save in harder assets. And that's why gold is at an all-time high, silver is at an all-time high, real estate is at an all-time high, stock market is at an all-time high. Meaning people are not buying that the Fed's story of inflation is only 2%. People are putting their money where their mouth is to protect themselves from the debasing of the currency. But Michael Saylor said, he goes, we're going to promote global adoption of Bitcoin as a treasury reserve asset for corporations. Now, you guys hopefully know how many trillions of dollars are in money market funds, okay, as an Apple, Meta, and Google. If you just look at those, I know Warren Buffett is not going to invest in Bitcoin because he doesn't believe in it. So this guy is the leader. There's a couple of companies in Japan, a couple of companies in Europe that are kind of copying what this guy is doing. He goes, look, my corporate treasury, we have an existing company. We're producing goods. We're earning some money. We're going to take that money. We're going to leverage that. We're going to issue corporate debt, and we're going to buy Bitcoin. Because that's what I don't want to hold cash. I agree on that one. Because cash is trash. And then he goes, we're going to just keep buying Bitcoin. I'm like, okay, cool. So he's going to promote global adoption of BTC as treasury reserve asset for each company's treasury, not the US treasury, promoted to countries like El Salvador has done wonderfully, cities, states, companies, both public and private. Can you guys imagine what will happen to Bitcoin if tomorrow Apple came and said, oh, we're going to invest like 50 billion in Bitcoin? Just maybe they're holding like 180 billion in cash, by the way. Remember, Elon Musk did that through Tesla a couple of years ago. What happened to Bitcoin at that time? Okay, and Bitcoin is a finite asset. There's only 21 million, and 19.5 million have been spoken for now. So, you guys need to pay attention to this. The Bitcoin evangelist does not stand alone in his crypto treasury thesis. Presidential candidate Donald Trump also said he would turn America's 12 billion BTC trove into a national strategic reserve. I'm like, okay, whatever. That's not the point. But what MicroStrategy and Michael Saylor are doing is the point. MicroStrategy and Saylor's Bitcoin holdings increased in value as Bitcoin surged to all-time highs. True, Bitcoin hit 73,000. Now this creates a continuous buying program for Bitcoin from just MicroStrategy. People, this is $42 billion he's talking about. And this is a 3-year plan. 3 years. He's going to issue 21 billion in MicroStrategy stock. Now, a lot of you may say, well, it's not going to dilute the existing shareholders. Not if Bitcoin keeps going higher. I mean, look, I'm hoping that this works out for him. But Bitcoin MicroStrategy may become the most valuable company on the planet if Bitcoin goes to like 400,000. I figured if Bitcoin goes to 400,000 and this guy keeps buying Bitcoin, just the Bitcoin holdings of the company are going to be like trillions of dollars. So I'm going like, okay, cool. But I just wanted to keep you posted with this, guys, because I'm a believer in Bitcoin, not as much as Michael Saylor is. But the reason I'm a believer in hard assets, accumulation of hard assets, is to protect yourself from inflation, is to protect yourself from debasing of the US dollar, which is happening every single year. You're losing 6-7% of your value of your dollar's buying power every single year. Don't think it's anything else. And hopefully your earnings are going up 6 to 7% a year, so you can keep pace with that. Unfortunately, we know how that goes. I don't think that's working out. Another quick topic I'm going to hit on is if we all should be investing in our retirement plans. Okay, if you're working for a W-2, obviously, right, you may have a 401k plan. You should have a Roth IRA. If you are an independent contractor, you should have an IRA. You should look into saving money for your future because Social Security may not be there. And are we going to in a recession? I can't say. I don't know. My crystal ball is not that good. A lot of people say we are. I don't know. I think we're going to go into a slowdown because Fed is seeing something happening and cutting rates. Although the bond market is raising rates, it's just really weird time at the moment for me. I'm just trying to make sense of all of this because there's a saying on Wall Street, don't fight the Fed. Fed is cutting rates. Everything should be fine. Well, I don't know. It's the first time in my lifetime of doing this that the interest rates markets, bond markets, are saying to the Fed, go take a long walk on a short pier. We're not buying what you're doing. So how do you protect your 401k if you're 50, 40, 60, whatever, and you have a massive 401k accumulated and you have put it into ETFs or some mutual funds, and you've done extremely well, obviously, right? So if we go into a recession, what's going to happen to the stock market? I mean, stock market's going to eat it, obviously, but how do you protect your 401k during a recession? Well, a recession is a time of significant economic slowdown. We agree. Hopefully, you keep your job, but even if you don't, if you maxed out your 401k contributions and your company is a decent company that matched you, you should have done extremely well. But in a recession, market will eat it, and then your statements that you get off your 401k are not going to look that good, right? Eventually they will recover. But should you trade your 401k? No, absolutely, because then you have to pay taxes. Should you just liquidate, go into cash in your 401k, which you can? That's one way of doing it. But timing the market does not work when it comes to 401ks and Roth IRAs. So there's a saying in our world that time spent in the market is much more important than timing the market. Let me say that again. Time spent in the market is much, much more important than timing the market, yo-yoing up and down. A workplace 401k is many people's first exposure to investing, which is absolutely correct. It can be exciting to see your balances grow and you keep contributing, and then it has the compounding effect, which is wonderful, right? But stock market pullbacks, like the recent sell-off that we had to the tune of 15% in 3 weeks, but then by the time you got your next statement, the market was back up to where it was already. Yeah, I mean, you should worry about your 401k. It is most people's major part of retirement, because whatever you're going to get out of Social Security is peanuts, right? I mean, although COLA's cost of living adjustments have been great last 2-3 years for retirees to the tune of 5, 6, 7%. This year they announced that it's back to 2.5%, while the debasing of the currency is going, while the printing machines are going, while the U.S. national debt just about this weekend, I think, is going to hit $36 trillion. Your 2,000 that you were getting out of Social Security 3 years ago, and you're still getting 2,000 today, is not buying the same, right? The buying power is not there. So, yeah, you should protect your 401k. You should look into your administrator, talk to your administrator about possibility of, if you're getting ready to retire, maybe not be into stocks, right? Not be into mutual funds. Maybe you should be into bond funds. You should be into more income. This is all individual basis, obviously. You should definitely pay attention to what's happening to the marketplace, to not trade your 401k, but you definitely should have a balance, right? At this point, if my 401k is, so the rule of thumb in the 401k is that according to your age, that's the way you should. So if you're 25 years old and you're working somewhere, you're creating a 401k, you should have 25% of your, should be a 25-75 rule, right? 25% of your 401k should go into fixed income, 75% should go into high growth, aggressive funds, right? Because you have your life ahead of you. But if you're like me, at this point, you should be like 65-35, meaning 65% should be in fixed income. Yes, your returns are going to be less than the market probably, but you're at least going to protect your equity, your existing account value, and only 35% should be in more like high dividend paying stocks and things like that, mutual funds like that in your 401k. So always try to think what you could do according to your age, right? If you're young, you should be in all in aggressive mutual funds in your 401k and very little fixed income. If you're older, getting ready to retire, specifically the last 5 years, you should definitely flip that over. Be in high dividend paying mutual funds, less ETFs, more fixed income. So you protect what you built working at a specific company for, 20 years, 30 years, whatever it is, right? And last topic, which is kind of related to this, but it's more related to me than anything else. So there's 2 types of investing on this planet, okay? Simply put, there's many, but the basic 2 types are active investing and passive investing, okay? What are they? Passive investing is you basically set it and forget it, okay? You do dollar cost average, you buy the same amount of the same thing, an index, let's say S&P 500 index. You buy, SPY or triple Q, very low cost, your dollar cost average, first of the month, every month. I keep saying this on every show. I'm going to keep saying until I'm blue in the face. If some of you are younger, if let's say you're 30 years old, right? Okay. The retirement age supposedly is going to get pushed up to 70 now, but let's say it's 65 or 68. So if you invested $100, just $100 every month, just single month, $100, okay? 4 people go out to McDonald's today, a family of 4, it's $100, right? Just $400 a month, and dollar cost average into some index fund, such as the S&P 500, okay, ETF. In 35 years, this is outside your work income, this is outside your 401k, this is outside your Roth IRA, this is outside your anything, okay? House, right, equity that you built. How much do you guys think that $100 a month will turn into in 40 years? So I'm sure all of you have kids. I'm sure all of you have grandkids, and some of you do. I'm sure you have acquaintances, wives, uncles, brothers, sisters. Tell your youngsters, start putting $100 a month away. That $100 in 40 years invested in an ETF in 40 years, outside everything else that they're going to do, is going to turn into $1.2 million. How many of you would like to have $1.2 million? Nobody told me this when I was 18, 20. I think you guys have the responsibility to tell your youngsters, and some of you are going to say now, I'm too old, I don't have time. No. You have time. If you're 50, do it. Your life expectancy is 78 or 77 as a male in this country and 82 as a female. Okay? You have all that time. 20 years, it'll turn into $500,000. There's no ifs and buts about it. It's the power of compounding, power of receiving 10% return. Period. Do it. $100 a month. Okay? So active investing versus passive investing. I'm an active investor. I have passive investments. I have a long-term portfolio and a short-term trading portfolio. My long-term portfolio, buy and hold, where I see the rotation is happening, such as AI stocks, right? Such as some stocks that I believe that long-term, such as Costco, my favorite company on the planet, they have done nothing but wonders, okay? And that's how you create long-term wealth. And then on the short-term side, you try to beat the averages. Okay, so the averages, let's say, go up 10% a year. If you're an active investor, you should be able to beat 10% a year. You guys will think, what's the big deal? It's not that much. Trust me, 95% of mutual funds cannot beat. With all their computers, with all their geniuses, with all their PhDs, they cannot beat the market. They cannot beat the benchmark. So that's why I'm a huge proponent of, if you're not like me, one of the lucky people who knows what they're doing, go DCA. You are going to beat every single money manager out there. Now, there are some brilliant people out there, such as Citadel, such as Bill Ackman's, these hedge fund managers that can return 20, 30, 40% a year. But in order to invest with those people, you have to have certain financial, standing, right? Even just to go in there and invest with these people so you can take advantage of the 20, 30, 40%. Because if at 10% that $100 a month is turning into 1.2, imagine what will happen at 30% a year, or a Warren Buffett type, which you can invest in Berkshire Hathaway. So to me, I beat the averages, but that's with my trading account. And I try to be in my long-term portfolio, I try to be in stocks that will beat the averages handily, such as, I've been talking about this for months on the channel, Carvana, Kava, all these stocks. And by the way, I sold all my Carvana after this last earnings report because I think it's getting a little ridiculous. That was like a quadruple in a year and 2 months on Carvana. Same thing on Kava. That's for 300 to 400%. Market's only done 40%, which is ridiculously high, right? So long-term portfolio, that's active trading, active investing. Being the basket of stocks that you think they're going to do a lot better than the S&P 500. Well, active investing has gotten its butt kicked over the last 10 years, period. Because when these ETFs came around, the spiders and the triple Qs, none of the money managers could beat, DCA and passive investing. So most financial experts I'm not going to call myself an expert, but I kind of know what I'm saying here. That active investing is unlikely to consistently outperform passive investing. In my case, no. In my case, I easily outdo the benchmarks on my long-term portfolio, buy and hold portfolio, as well as trading, side, because I have to keep pace with inflation somehow, right? But more importantly, it is not that hard, people. It really isn't. But hopefully you'll learn that, and then you'll join that little group of 5 to 8% who continuously outperform the benchmarks. And especially when considering the higher fees associated with active funds. Yeah, because when you're part of, like, let's say, hedge fund or private equity, they charge you 2% to get in there, and they take 20 to 25% of your profits. So you have to consider all these things, right? Or some mutual funds are very high cost. So my light is going out. Let me turn that thing off. I don't know why. And the other thing that you have to consider is high volatility, right? On an index fund, the volatility is not that much. On a stock, it could be massive. Okay, so you need to be able to stomach that as well. And active strategies, though, my point now is on all this topic is active investing going to come back if the market eats it? As I am kind of not hoping for at all, but I'm kind of thinking we're going to have a really volatile period. And during that volatility, because market's done nothing but all-time highs, I think 45, 46 times this year. So I think active investing will have its time over the next couple of years, because the other thing is Goldman Sachs put out a massive report actually saying that it's going to be the lost decade coming up. I hope they're wrong. Goldman Sachs, which I think are the golden standard on Wall Street, they said the returns on the S&P 500 going for the next decade is only going to be 3% a year, basically a sideways kind of a thing, right? Well, we just experienced 40% in one single year from October to November of this year, last October, right? So market is not going to do 40% a year. The average is 10%. So what are we saying here? Well, it's either going to be just low expectations going forward for a few years until the next phase comes in, or we're going to have a pullback, which all of you can take advantage of DCA into that. So studies consistently show that passive funds with their lower fees tend to outperform active funds over long periods. I 100% agree. There's market efficiency as well. Modern markets are considered highly efficient, which they are. These used to be decimal days. I mean, from the quarters and eighths, and spreads were very wide. The efficiency has been created by decimalization, and most stocks now on the bid and ask, you're not losing that much. It's called slippage. Modern markets are considered highly efficient, yes and no, because it's also manipulated, making it challenging for active managers to consistently identify undervalued stocks. Well, it's true, because Warren Buffett used to do that really well. I don't know. Can Warren Buffett do what he did 20 years ago, 30 years ago today? I don't think he can, but I'm never going to question Warren Buffett. But I see active outperforming passive coming up probably next 2 to 3 years. So if I'm still doing the channel in the next 2 to 3 years, I will give you guys some wonderful, wonderful ideas of rotation, of what's going to do well, of buying and holding something, or all these things, right? And I'm doing that now because I'm an active investor, and I'm doing that now. But I think the time is coming up for active investing. So with that said, let me go to the front screen. Let me answer some comments and questions, and then I'll go to my charts for my watch list coming up. All right, William. Hey, Sergio. Hey, hello. Good morning, Vic. Mojotronics says, see all these members with their little signs? What about who's better for your mental and moral compass? I'm not going to get into that. You mean as far as politics is concerned? No, I'm not going to get into that. Good morning. Good morning. Another member. Terry, good morning. Got my shot. There you go. You got his shirt. Okay, so if you become a member, not only you get 2 extra live streams where you get individual attention, but you get a free t-shirt. You need to just send me your color, this t-shirt that I'm wearing. You need me to send me your color you desire, your shirt size, t-shirt size, and your physical address so we can ship it out to you. Got my shirt right after the membership. Okay, cool. Next time you wear it on the 13th, coming up. I need a stop phone. Yeah, that's coming up. Yeah, we're coming up. We're gonna do some cool merchandise. I'm gonna do, you know, that exactly. FOMO YOLO HODL shirt. We're gonna do Don't Catch a Falling Knife shirt, which I'm doing actually with one stock that I've been buying. Hopefully it'll be turning into something decent. Yes, it was a great member show. I think 6 or 7 were there. A lot of good information exchanged. I learned a lot from them, and I'm pretty sure they learned a lot from me. Lynn Quinby, another member. I'm not going to get into that. We can debate that individually. Not necessarily. Democrats are not always better for the economy. The national debt went up $4 trillion with Biden and Kamala. So I'm going to end it there. Keith, thank you. Thank you for the super chat. I appreciate it. You should have done that, like become a member, and then you would have gotten a t-shirt for free, buddy. And then you could have come and join the live streams. Okay, Mojotronics is shooting already. Sound just bouncing over. Hey, did you read your book? Did you? Did it say that you should buy off the 50-day EMA? I don't know. Okay. Look, I'm not going to give you a fish all the time. I'm going to teach you how to fish. I can feed you for a week to 10 days or a month or a year. And then what happens when I'm gone? I can't be your crutch. You need to learn. I'm here to teach. I'm here to educate. I'm here to inform. I want you to catch the fish, and I want you to catch the bigger fish than me at the end of this. I want you to call me and say, hey, I have this idea. I'm like, great. There you go. Don't depend on me. November, momentum, not today. I need a hug. Okay, here's a hug. I give you a hug with your Know Your Worth t-shirt. And where Lisa Silver is 65%-ish of ATH. All-time high? I don't know. More context. Craig, another member, is here. He was there. Craig is one thing for sure. Out of all the members, he's the least gun-shy one. Everybody is like paralyzed. Craig is just pulling the trigger. Okay, well, we'll see. We'll see how that goes. I'm not going to talk about elections. I have my trade on. I will explain that to you guys in a minute. Okay, this is not. Let's not get into the political discussion here, William. Okay. Do I know much about hyper scalping? I know about scalping. About hyper scalping, meaning you day trade and you're like a hummingbird and you jump from short-term trade to short-term trade. That's not my style. Okay, I could not care less about day trading. You're all going to go broke. Okay, I will compare my numbers to a day trader's numbers over long periods of time, anytime. I will run circles around you guys. The problem is with that is, yeah, you will make some good money a month or 2 or 3. Very few day traders end up being profitable over long periods of time. Talk to me in 30 years if if I'm still around. I'm still here, right? I didn't blow 10 different accounts to get there. So yeah, I mean, hyper scalping, yeah, you can scalp. I mean, I'll scalp once in a while if I see something happening, but I'm more of a position trader and swing trader. But yeah, I mean, if the opportunity there, like yesterday, I scalped with index puts, which I had the day before. I added at the open, and then I sold them. I mean, I'm not against it. It's not my style, and yeah, gold and silver, absolutely. Both at all-time highs. Yeah, they had a little pullback yesterday, but why do you think all these assets are all-time highs, people? Why? There you go. There you go. I wouldn't even do Ethereum. I'll just do Bitcoin. Ethereum, there is no end to Ethereum. They can keep printing Ethereum. So, Bitcoin is it for me. Hey, Jonathan is here. Hello from Morgan. Hello, Jonathan. Okay, ask me some questions, guys. Okay, William. Yeah, okay. All right, so oh, it's a joke. Okay, sorry. Is that the title? What is the title today? Oh, who's better for the markets? Yeah, that's what Chris was selected. I don't know. I did this research. The markets have done better under the Democratic White House than Republican White House. What do you want me to say? Go Google it. I Googled it. It must be true. If Google says it, it must be true. No, it's true. So okay, I'm going to share my screen. Here is my screen, and you guys will see what what I'm short, what I'm long. Again, I will post all these community page of the YouTube channel. Okay, please pay attention. Go check it out every Monday, Wednesday, Friday, before 2 p.m. By latest by 2 p.m. Pacific time. Then you can go back to the Wednesdays. So today's Friday. Then go back to Wednesdays. Take a look at that screenshot. See the position, what carried over, what didn't carry over. What I still have holding from Wednesday or from Monday. What am I looking at? I'm doing mostly derivatives, options, but I'm also accumulating some stocks on my trading account. Excuse me. You can tag along if you want to tag along. I mean, I'm not against it. So let's look at the lists. Ooh. All right, we're up again today. So we bought some puts in the morning on the rally because this is a dead cat bounce. I'm not believing any of that. Okay, so let's take a look what we're doing here. All right. Go to charts. We'll go through our list. Actually, let's go through the position screen first. So these are the current positions, which they may or may not change at the end of the day. Actually, I will sell something in a second. So I keep adding 1,000 shares at a time every 10 cents. I started at my cost right now is $2.94. I'm long 9,000 shares of WOLF. It's called Werewolf Therapeutics. I will do a covered call strategy on this at some point, but I'm accumulating at the moment. I will have another 1,000 shares to buy at 240. I'm okay with I'm comfortable with that position. You don't have to do 10,000 shares, obviously. And that's only about, this is going higher on this, actually. I'm going double because it's equity. It's only, let's see, it's about 17% of account value, which I will max that out at 20% because it's equity, because it's not options. I trimmed a little bit today. I'm going to trim some just now, actually. I'm still long Unity. I like the underlying equity. So when I'm doing options, you guys can always go do the equity. Okay. So if I like Unity, and it's been here for a while now, stock is 2021. It's up 90 cents today, doing great. I'm like, yeah, go buy the underlying equity. Go buy one share. Go participate that way. Some of you may have seen my DJT, Donald J. Trump video, how to trade the elections. Stock went from 11 to, I'll show the chart in a minute, but stock went from 11 to close to 70. Now it's cut in half down to 31. This is trading with that betting site, right? So at the moment, I was short calls, short puts, which is called the short strangle. For November 15th, I covered the calls because I sold them at like 4.5. They went down to nothing almost, and I don't have to wait to the last day. But now I'm short the puts. I'm going to add a little bit to the puts. I'm short 15, so I'm willing to buy 1,500 shares of DJT. The reason I'm doing it is because the implied volatility on DJT is 426%. Average implied volatility on this is only 110%. So we're selling 4x right on Tuesday morning. Whoever wins. Well, if Trump loses, I think this may go to 10. But I'm willing to buy this at 15 minus the premium, so I'm comfortable with it. I'm short 15. I'm short 15 of the puts, and those are the November 15th expiration $15 puts, 1.5. All-time low on the stock is about 11.5, so I'm willing to buy 15 minus the premium. I'm not worried about it yet. I am long 80. It goes, no, I like the stock a lot. LUNR is the symbol. And Lunar, right? It's called Intuitive Machines, which the space, they're involved in space. We'll look at the chart in a minute. I'm long 80 of the December now. I'm moving to December on this. I was long November, so I made decent money with it. I'm long 80 of the December 10 calls. Stock is 792. My cost is about 67 cents. They're about 65, 67 cents. Break even there. I will sell. In fact, I will sell. I won't sell it. We'll see if it goes higher. So this morning on the bounce, I bought puts, like buying these puts, as you guys can see. I'm long 15 of the November 15th on the SPY. 575 puts. My average cost is 9.5. They're about 10.5, so I'm up about 1,500 on that. That's called scalping if you're going to scalp. And I am also long 15 of the November 15 570 puts. My cost is 7.5. They're about 8.25. Of about 1,100 there. So that's how you balance yourself out. Okay. So if the and index is 571.5. Of course, what did I do? I went and sold today's expiration 0 DTE to lower my cost because I'm long 30. So I sold 30 of the 570 puts and they're going to expire in an hour and a half. They may expire worthless or they may expire worth something. But then if the market does go down and they're worth something, that means my long puts are going to appreciate a lot more. So not concerned. We'll wait until the end of the day. If they expire worthless, I lower my cost. And then I most likely will keep my long puts overnight and have a little bit of a sanity and balance. Other than that, DJT, I may add. A lot of people are saying if Trump loses, this will go to 0. I doubt that it will go to 0, but I will have my play. I will hedge myself if I see some ridiculous thing like that could happen. I'm going to put in a sell order on Unity at 50 cents because those are Novembers, and I want to see. I was under in that position. I was just giving me a little break even. Let's sell 10. That's to cut it down, trim some more at 50 cents. 50 cents, it is. Yeah, I like trimming things. When you go down, and overall, I trade equity, by the way. There's done, that's done. Overall, I trade equity. I really don't care about individual positions. If my equity is higher than the day before, I'm fine. I honestly don't pay too much attention to, when people say, "Oh, but you have a loss," I'm like, "Yeah, I actually took a tiny little loss." So I'm not worried about it. What I'm worried about is equity, right? If I had $1 and at the end of the month I have $1.20, the account has gone up 20%, right? Whatever happened during the month, I lost on this, I gained on this. It doesn't matter. My equity is higher, so always look into equity. Don't look at other hocus pocus stuff. And yeah, sold 10. We're down to 40. Okay, yeah, we're kind of balanced. Yeah, not much to do. Just wait until the end of the day to see what happens with the SPY. I bought the puts correctly for sure. But if we rally, my short puts are going to expire worthless, and then the long puts are going to they may depreciate a little bit, but I have profit, so I'm not going to worry about it. Here's the charts. Let's go to the charts. Let's go to the watch list really quickly so I can answer questions. This is Unity, by the way. Oh, this happens to be out here. This is 1-year charts, daily charts. My charts don't have any lines. I don't do squiggly lines. A lot of people look at lines and they just draw like 50 lines, and like it creates nothing but bias. Unity just bouncing off right off the 50-day. I like the chart. It looks good. MACD is above 0. It's above its all it needs to do is get above 22.5 and this thing is gone, right? So Unity is a software company. Symbol is U. But let's go into triple Qs. This is triple Q. So I do have one line, as you guys can see. I drew an uptrend line, which we broke out broke under yesterday and closed under and kissed the 50 EMA and then bounced today. Today's bounce, I call it dead cat anemic bounce. MACD turned down. I am very cautious on the markets. This is the triple Q. I'm not saying it's super bearish or anything. I'm just saying that please watch out. Same thing with SPY. That's why I bought the puts on the bounce today after making decent money with them yesterday. This is definitely under the uptrend line, as you guys can see. And there's this also channel that, I draw lines when I have to. Otherwise, I don't. There's this perfect channel that the S&P 500 is going into. It's a lot closer, a lot further from the lower end of the channel, and it's 200 EMA. So today we bounced right back to where we should bounce, which usually when a trend line breaks, people, if you're reading your technical books, technical analysis books, a trend line will break. You will have a snap back to the broken down trend line, and then you will roll over. And that's what it seems like it's happening today. And I will hold those puts. And MACD definitely has turned down. So there may be a little bit more pain coming up here. And let's go through the Mag 7. Apple. Here's Apple. Oh, never mind. Apple. Apple's earnings were okay, but then, the analyst community didn't like it. This tried to make an all-time high. I could draw a line right up there, but I'm not going to because my eyes are good enough to create that line visually. It tried. It retested the all-time high at 237.49. It failed. Now it's pulling back. Support on Apple is at 214. Next support at the 200 EMA. There is an uptrend that it broke under, just like all the triple Q and SPY did. This is the uptrend. I mean, I could draw it, but I'm not gonna. I can see it. MACD's turned down. Don't like Apple short term. Amazon, opposite. Earnings came out, making all-time high, making Jeff Bezos a lot richer. Beautiful chart. It's just kind of went sideways, created almost like a cup and a handle, if you guys are paying attention to it, or what else? If you're reading your technical books, here's the left shoulder, here's the head, here's the right shoulder with a neckline at all-time highs. Lovely looking chart. Meta is another one. Meta is, higher highs, higher lows, but it's coming close. Earnings were okay, but they sold the stock off. Microsoft actually was the worst one out of the group. Microsoft was the only Mag 7 that's breaking under its 200-day. Gotta watch out. You don't want to mess with 200 EMA. If a stock breaks under, and this has almost the look of a massive head and shoulder top. If you guys are reading your books again, here's the left shoulder, here's the head, and here's the right shoulder, extended right shoulder, and the timing is just about perfect on this with the neckline at 385. Watch out below on Microsoft. Tesla. Tesla had massive earnings. Island gap reversal right here. Again, if you're reading your technical books, technical analysis books, it's called an island reversal. In fact, Vic called this a bear flag. Well, what happened to the bear flag? No bear flag. Gapped up. Now it's pulling back. Probably a buyer of Tesla into the gap, but also depends what the market's going to do. And last but not least, NVIDIA out of the Mag 7. Nothing wrong with it. Made an all-time high, just pulling back now to its 50-day. There is an uptrend here, but it's one of the better acting Mag 7s. Probably the best acting Mag 7. AMD, dog shit. Excuse my language. Broke down. Yeah, nothing there. I do rotate the screen quite often, by the way. One of my favorites that used to be when it was like $8, it went to 40. And then going sideways, AST Space Mobile. A lot of the Chinese names I like. A couple of them are Baba. Right on the 50-day. I was long Baba on my BABA Alibaba actually. In my long-term trading account, I trimmed quite a bit. You guys can, by the way, all of this is public info. All of it is on the previous power hours or trading with Sergio. I'm telling you guys also what I'm doing in my long-term portfolio. I own Alibaba in the mid-70s. If you guys started watching me 3 months ago, I've been saying that just religiously. If you tagged along, bought it in 70, stock at 120 almost. I trimmed quite a bit actually, more than half the positions, long-term position. So you guys know. Another one I like is Bilibili in China. And you know, it went from 16 to 32, doubled in like a week and a half, and then pulled back. I traded it twice. You guys know, again, go watch the power hours or go watch the position screens. Now I'm kind of flat. I'm watching it on the next turn up. I definitely think this is a chance. It's about 21 and a half. This is a chance to probably 28. So it's okay. Another name I like in China is JD.com. Another strong one. I mean, some of them are not as strong, but JD, Billy, and Baba are the three of the strong Chinese names. JD.com went from 25-ish to close to 50. Now it's just kind of going sideways, waiting for the moving average to catch up. Like it, really like it. So let's see a couple of other names, and then we can go forward. One stock that I put on there, and last Friday, said the same thing, CRISPR Therapeutics. I like patterns like this. I mean, the reason I'm not in it because it's under his 200-day. I do not touch anything that's under his 200-day, people. Make that your first rule of thumb. Do not touch, do not buy stocks that are under his 200-day average, okay? So with that said, but it's a biotech stock. I'm watching it. I like these patterns that go sideways, and then break out. And this is DJT, Donald J. Trump. So as you guys can see, stock was as low as the all-time low is 1175, right? It's super, super, super duper volatile, okay? You got to have the stomach. That's why the market makers have 400 IV on these, the implied volatility. It went from 1175 straight up to 55. Now it's down to 31. I'm short the $15 puts. If you guys looked at it, I was short the 85 and $100 calls. Somebody paid me 4.5 for 85s when the stock was 55, and somebody paid me over 320 for the hundreds. Those things hit the wall so fast because stock went down, obviously. So I covered them, I closed them, took my profit. So I'm just gonna hold on. What else? Let's see. I'm not going to do everything on my list. My lottery ticket is coming in now, but too late because my options expired worthless. See, I'm not afraid to tell you guys my losses. I like this chart quite a bit. I love these types of charts, right? Big move up, catalyst, going sideways, going above its 200, going above its 50. MACD's above 0. Hain Celestial, HAIN. I had 325 of the October $10 calls. They expire worthless. I had only paid a nickel. Well, I'm not going to do it yet, but this time I'm going to buy the stock. I've been buying HOWL. I have 9,000 shares. I'm going to go to 10,000 shares probably. Here's HOWL. Massive catalyst. A lot of, actually, if you guys look at the what do you call that? Analyst ratings on this. Bank of America has a 12.5 target. A lot of the analysts have like 10, 12 targets on it. Stock is like, what is the stock is doing? 250. I mean, stock broke out from 220, went up to like 4 and change. Now, an absolutely zero volume is pulling back. So I like these types of pullbacks. It's pulling back to its 20-day and 50-day EMA. It better hold here. If not, then I'm going to start doing some therapy and start selling some covered call options on it, which I will explain actually on the next members only. I like these types of charts, although now it's under its 200-day. As I just a minute ago said, don't buy anything under 200-day. But when I first started buying, it wasn't under 200-day. I like these little, kind of bleeders. And then I think it's like right here, like this is going to be, it's about something like this. And next leg up should be higher. So I have 9,000 shares of that. I'm buying it. Financial stocks are okay. Goldman Sachs. I mean, what is there to say? See, this is the type of things that we're talking about here, right? Goldman Sachs, right? Higher highs, higher lows. Carvana, I am 100% out. So if you did follow me on that, I've been talking about Carvana for months. In 4 months that this channel has been alive. Even if you tagged along then, you doubled your money. I bought Carvana in the 20s. in my long-term portfolio. Held it for, this is Carvana, for a year, so you guys can see. By the way, this was a $4 number. I didn't buy it until the 18s to 20s, by the way. Why is the reason? The reason for that is I don't buy things when with the anticipation of going up. When they get going, I'll get it right here. This is actually where I got it, right about here, when it went above its 200 EMA. And since then, and that was, by the way, when was that? No, I'll give you the date. Long-term portfolio. That was, yeah, that was about August of last year. And now I'm 100% out. And last earnings came out, stock went to 250. I go like, okay, I'm done. Same thing with Kava. Okay. I've been talking about Kava forever. Kava, I'm trimming. Baba, I trim quite a bit. Even in my long-term portfolio, not anticipating. When they get to my levels, I'm going to get out. I'm not going to just wait. This is Kava. These are the types of stocks we need to find, guys. Okay. Higher highs, higher lows. Trend is your friend. This is Kava, right? I trimmed this one too. I'm down to close to trim 50%. I bought this in the 30s after eating there the first time about a year ago. I'm like, I love this. This is awesome. Few of my favorites kind of experiencing a little bit of a pullback. Affirm, still like it. Still going sideways. Above its 50. I like it. When do I get in Affirm? I don't know, about 40, 41. Upstart is another one that I like. UPST is the symbol there. In fact, UPST is experiencing a pullback, breaking under its 20 EMA. Next support in UPST is about 45, 46. Stock is 47.80. I will add there. I don't have a position yet, but I will start a position as close as possible to the 50 EMA, which is this highlighted turquoise line. And the old high was 45.85. Old high, if you're reading your technical analysis books, becomes new support. So now, anywhere 45, 47, I'll start legging in. This one is interesting. It's called Lightbridge Technologies. And this is a wild one, right? It was like $2 number, goes to 14. Earnings came out yesterday. Yeah, I'll pay attention to it when it gets down to 6. It's about 8. So LTBR is a new one that I added. Pay attention to it when it gets down to 6. MicroStrategy, Michael Saylor. Bitcoin is not doing anything, and this thing is going higher. Ooh, today it's getting a little smushed. Let's see where IBIT is the BlackRock Bitcoin fund. So this is actually owning Bitcoin, okay? Then there's BITX, which is 2x of Bitcoin. Okay, but this is MicroStrategy. MicroStrategy even has surrogates now called MSTU. This is 2 times MicroStrategy, as if MicroStrategy is not turbocharged enough. There's turbocharger on top of turbocharger. I mean, there's like leverage all over the place. So I'm okay with leverage, but when craziness happens like this, I just got to pay attention to it. This one I'm definitely just dying to buy if it goes above its 200-day. It's called Piedmont Lithium. A lot of lithium stocks are doing well. This is another one, Albemarle. Again, under 200-day. That's why I'm not touching it, but I'm just on my watch list. If this thing goes above 200 EMA, I'm all over it. Same thing as PLL right here, Piedmont Lithium. Let's see. What else? Yeah, you guys want to see a moonshot? No, I never want to go. I'm not even going to get there. Let's see. I think that's. Oh, you guys want to see? See, okay. This is a good point to make you guys understand. This is super microcomputer. When the AI boom was going on, this thing went from 30 to 130. Right here. Beautiful uptrend, like while you're here, right? Okay. Now what? Went sideways, broke down, broke to 200, broke to 50. Now, lower lows, lower highs. This is one of the few stocks that had a massive uptrend, followed by a sideways, and then once it broke down, massive downtrend, right? That's why you do not buy stuff that, now you can short these, right? You're going to make a ton of money on the short side. What I'm trying to say is that there are so many beautiful charts out there. Just because it's down, okay, this thing was $50 4 days ago. It's 26. And you may say, well, it's down 50%. You guys know that something can go down 50% indefinitely, right? And not hit zero. But this is what's puzzling me, people. I'm going to show it to you guys. This is the 20-year Treasury bond ETF. You guys see what's happening here? This right here at the top, when it was at 101, this is an inverse indicator, by the way, but this is a yield on the 20-year interest on the 20-year bond. That day right there, 916 or 917, 916 or 15, Fed cut the rates by 50 basis points. The bond market since that day has been selling off and interest rates have been going up. How? I don't know. Why? I don't know. But the bond market is telling, the bond market is so huge, even Fed cannot manipulate the bond market. Okay? So you guys understand something is happening. I'm trying to make sense of it, but I will and share it with you guys. Uber's earnings came out yesterday. Didn't like it. Well, I mean, we all know about Uber, right? So it kind of came down to its 200 EMA, which is about 70, bouncing a little bit today. Don't like that chart. Lyft, I think I like a little bit better, but still don't like both companies. This is Unity. Unity is moving today. It's 20. Oh, I talked about Unity already. What am I saying? In fact, I will sell a few more options and roll them to December. Let's see where the spiders are. And then I'll go back and answer questions. 572. So I'm short the 570s. I'm okay with being short the 570s, the 0 DTEs. They will most likely expire worthless and lower my cost on my put. Yeah, Lunar, I'm loaded with it. I like that. This is okay. So these are the types of patterns I like, right? It goes above its 200 on huge volume. MACD goes above 0, goes sideways, breaks out on Catalyst, which is they got a 4.2 or 4.4 billion dollar NASA contract. This is a small company, people. And gapped up again. Now what is it doing? Sideways on absolutely anemic low volume. Next catalyst or next move will come up, and this will visit 13-ish levels. And I like Lunar. I bought the December 10 options. You guys don't have to do options. You can tag along with the stock itself. Because on stocks, you don't have to be right in the duration and direction. So I like the stock. I think we I like it. I mean, the downside, you know what your risk is in here, right? Your risk is your 50-day. 710 stock is 8. Okay. Your risk is upside is 13. Solid 60%. Downside is 8, 10% max. So those are the risk rewards you guys got to look at. But I like the pattern, right? It's going sideways. The next leg up, we'll see you at 1213. I like it. And I'm going to go to the front screen, answer questions. This is the monitor meaning my positions. Okay, same thing. 9,000 shares of Werewolf Therapeutics with an average cost of $294. Stock is $247. No problem. Unity. I will sell 10 more calls and start rolling these. Sell 10 more at 55 cents. 10. I'll be down to 30. Trim. Keep trimming. Okay. See? You had a loss. You came back. Always take those small losses. If you bought something at a couple thousand in loss and it brings you back to 300 loss, take that loss. Those are the best trades you're going to make. And then I'll sell 10 more at 60 cents. Almost break even actually on these now. I had you take those. Those break evens are the best trades you're going to make because the good ones are going to be the good ones anyway. Those are the best trades of my career. When you go down in a hole And you come back? Yeah, you just kind of, there is one. There's 10 sold. Okay, let's see our puts. 572 is the index. I'm fine. My puts that I sold at 30 cents down to 14 cents, they're going to most likely expire worthless. Those are the 570s. And I will hold on to my long calls. Beautiful day. Pretty managed. DJT 31. It's all good. I don't see anything else. But I'm looking at all these other ones too. Definitely leg in, leg out. As long as they get there, my plan is ready, and I'll execute. That's how you do it stress-free, people. Okay, so let's ask some questions. Answer some questions. Okay, oh, where did I leave you guys? I know, simple as how. Okay, I apologize. I call it wolf. Why do I call it wolf? Budgetronics? Howl, not wolf. That's right. HOWL is the symbol that I'm buying. Wolf is wolf therapy. Jesus, you're right. I apologize. So the symbol is HOWL. Howl. It's wolf therapeutics. Okay. Wolverine therapeutics. Hain Celestial. I talked about Hain Celestial. I like it. It's breaking out. SoFi, I'll take a look. CRISPR, I talked to you about. No. It's a no. It's under his 200 day. Yes. Sound. Okay, let's look at sound and let's look at SoFi. Okay, what else? It's going to be, Vic says it's going to be hard to find stocks like that. Like what? Absolutely not. You mean like Kava and Carvana? Absolutely not. Happens all the time. Okay. It could be that PLL could be the next one. Piedmont Lithium. You know, that thing was $75 2 years ago, right? I mean, there's never any that I will never accept that. It's going to be hard to find. No, when they get there, you do it. Chipotle, okay, that's number 3. Yes, this is exactly what he did. He became a bag holder, but then they gave him the bag back, and then he took the bag. Thank God. Those are the best trades in Mojotronics. They feel good. All right, let's look at those 3 stocks, and then I'm going to run. All right, 3 stocks. SoFi, what was it? SoFi. CRISPR we're not doing because it's under his 200 day. Okay, Hain I talked about. SoFi, CMG, which is Chipotle, and SoundCloud, right? That's SoundCloud? Yes. Let's take a look. All right. Let's take a look at CMG. Chipotle. Oh, gap down. Must be earnings. Gap down, snap back up. Don't like it. Don't like it, especially if it goes under 53. You could go short if you want. I don't like it. SoFi. Beautiful. Okay. What about it? Uptrend. There you go, Vic. Right there. Broke out at 8.5. 11. Let's look at long term. Nothing wrong with it. Buy, pull back to 9, 9.5 for sure. Let's go. Good idea, Craig. See? Okay, look at this. Look at this, Vic. Okay. Does this remind you of Carvana or Kava? Huge base. This is 3 years. Okay. Broke out of the base. Any pullback now, you buy. You buy 9.5. Your risk is low. Above is 200. Above is 50. Above is 10. Yes, it's not a fast mover like Carvana, but you will make money. You will make 20-30% on it. And on the breakout, if you bought on the breakout at about 8.5, at 11, that's already, I don't know, that's already up 30% in a couple, 3 weeks. On pull. Now, these are the types that you buy on dips, okay? And your risk is set. If you buy on the 50-day, if it goes below the 200-day, you get the heck out. I mean, not every trade is going to be a winner. Okay, so we looked at SoFi, we looked at that, and we look at SoundCloud. Let's look at SOUN, right? No. No, because it never clearly broke out. Mojotronics. Look at the 3-year chart. You had resistance. It got up there. It retested 633. Now it's pulling back. You could buy it. It's low risk buy, but I could see it going down to 4.5 to test to 200, which is possible. I mean, here it's a lot less low risk trade than it was at 6, obviously. So 513, you could give it a crack. A visit back to 6, I don't mind, but it's not one of the better. Now, the buy here would be if it went above 637, 640 on considerable volume like this. Do you see what I'm circling here? Just like it did last time, right? That's when I think you could definitely take a look at it. It could be one of these actually now. So, yeah, it's okay. Your risk 200 EMA. Where is that at? That's about 455. Yeah, you risk 60 cents, but that's a lot. $5.10 stock, 60 cents. You're risking 12%. Let's risk about 7. Let's try to buy it under 5. If you're going to buy it. If you're going to buy it, be disciplined. Wait until the 200 EMA. How about that, Mojotronics? No FOMO. Remember, no FOMO. Be disciplined. Wait until 455. Because every time it gets to the 200 EMA, what does it do? Bounces, 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 bounces. How many bounces it has off 200 EMA? 1, 2, 3, 4, 5. Well, let it be the 6th. That's when you know your risk is low. I wouldn't do it. I wouldn't buy it yet. Okay, there you go. Yeah. Okay, let's go to the front screen. Hope you guys enjoyed it. Come back on Monday, please. Monday is Trading with Sergio, and Tuesday is elections. All right. Roy, okay. Yeah, I mean, if the stock breaks 53, I think we're going to 47 and then lower. It's right on this 200 EMA. I'm just looking at it technically. I know earnings came out. Earnings weren't as good, but plus their CEO left. You know, it's not a volatile stock, right? But if I were to invest in a quick serve restaurant stock, like Kava would be it on any pullback, right? Because it's kicking Chipotle's butt, actually. CAVA is the symbol. It's a little too high now, but if the market pulls back, Kava pulls back to like 110, all over it. So yeah. Okay, if you're holding CMG, why don't you do covered call writing? Why don't you sell some calls against it? Go sell $55 calls against it. If you hold minimum 100 shares, you can sell calls and lower your cost. Or without selling the stock, if you want to protect yourself, you can buy puts. And you can protect yourself on the downside. You don't have to sell. There's many ways. There's many, many ways of, protecting your position. All right, let's take a look at glue. Oh, glue, yes. Yeah, that's the problem here, right? You need to look at, okay, you look at 1 year, and then you look at 1 day, 3 year. Gives you a completely different perspective, okay? Remember on SoFi, it looked really good. And then when I do look 1 year, 1 day, 3 year chart, it looked really, really good. All that base it did in 6 to 8 range for like a year and a half, right? You always have to look at the bigger picture. Pull yourself back a little bit. Look at from higher up. You will have much better idea about what you're dealing with. That's why these day traders, right? They look at 1 minute chart. How can I figure anything out by looking at a 1 minute chart? Anything is possible in a minute. But anyway, take a look at glue. Yes, I can take a look at glue. Let's do that. Isn't it on my trading list? Didn't I put that on last week? Monday? I think I did. Let's take a look. Hold on. No panic. Yeah, I don't pay attention to day traders. I mean, look, whatever they do, they do. Whatever floats your boat, man. No problem. Those are the adrenaline junkies. I can't deal with that shit. I have other stuff to do. What am I looking at? My brain is gone. Glue. GLUE. Yes, sir. Let's take a look at it. Yeah, see how different the 1 day, 3 year looks on SoundCloud or SoundHound, right? It's an AI stock. Yeah. So the other thing is this. If on the AI world, you have so many, like one is that I started watching is AI actually, but I'm not touching it yet. I talked, right? So sideways, 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 sideways. One to break out. See, this is 3-year chart, 1 day 3-year chart. Literally, the company symbol is C3 AI. And the 1-year 1-day chart looks a lot different than that, right? So what I'm saying is like this is right on this 200-day. It's just going crossing back and forth. All this needs is a little catalyst, maybe earnings or whatever, and then this will pop, and then you're moving on. So yeah, always pull back and look at it. Glue, GLUE, Monte Rosa. Yeah, this is the one that. Yeah, actually, yeah. Okay. You asked the question. I'm going to have you answer it since you remember and reading your book. What do you think is going to happen here? This is the 1 year. See, this is what we're going to start doing on our member onlys now, member live streams. We're going to start doing some testing. Let's see what you guys learned last 3 months. So you have 2 weeks to catch up and read some books. 3 years. Lovely. Okay. There was a catalyst on this. For sure, right? I mean, it took off 5 to 12 and a half. What was the catalyst? I remember they did some sort of deal somewhere. I'll look at it in a minute. Okay, so question back at you. I know I can guess what's going to happen, but what do you think is going to happen? Okay, first of all, right? I'm going to go back and read your answer. If not, come back to me as a member on the live stream. Yeah, what do you think is going to happen here? Now, okay, I looked at the 3-year 1 day. I looked at the 1-year 1 day. Now I'm going to go look at the 2-minute, 2-minute 1 day. Okay. And then I'm going to look at 10-minute 10-day. This is the VWAP. Okay, dokie. And then I'm going to look, VWAP is volume weighted move, average price. And this is the 1 hour 30-day. Yeah. Okay, so I showed you all 3 charts now. Do you have all your 3 charts like this set up? Okay. You pop from 5 to 12 and a half, pull back, going sideways now. Volume disappeared. All this volume came in. What do you think is going to happen? You answer the question for our audience. Easy answer, man. Well, easy for me. Okie dokie. Okie dokie. What else is going on? Let's see. Not much. Same thing. Positions did not change. Let's go back, and I will see you guys on Monday. Okay, hold on. Hold on. Okay, last minute questions. Anything else? Okay. Yeah, so Techie B, Sergio at sergioavedian.com. Email me your answer. What do you think is going to happen? I gave you all the charts. DTs, look at 10 seconds. Yes, I can't deal with that. It's okay. See, this is the first P. What's the first P, Mojotronics? What's the first P out of 3 Ps? You got to look at Hal. Hal is they got 120 million in cash. They have enough cash to pass them through their product launch if it gets approved by the FDA. Look, it's a biotech stock. You got to be patient with these. That's what the first P is. Techie B says. Yes. See, the members know patience, position, and planning. Okay. When do you buy? Okay. When do you buy GLUE? And where do you put your stop? Right? It's took off, pull back, going sideways now. Once it turns up, watch the volume. If there's no volume and it's bouncing, they're going to nail you with it. They're going to pull your rug under it. But if there is volume, like it was the previous move when it went from 5 to 12 and a half in a day, get in. Because it's either going to make a higher high or you will at least have some move. You will at least retest to 12 and a half. Okay? and your stop is tight right here. Look at the VWAP. Look at the 60-minute chart. 60-minute, 60-day chart, and that's it. That's your trade. If it breaks that, you put your stop there, get out. Nothing more, nothing less. On a daily chart, it looks like it's going to go sideways. Basically, it's going to create a trading range now. The way I'm looking at it, probably between 7 and 9. Just go sideways, create a what flag? Bull flag, because remember the flag pole, 5 to 12. Just go a little sideways and blip, next one coming up. So that's it, people. Hope you enjoyed it. I enjoyed it, certainly. Come back on Monday for, again, thank you, Keith. Much appreciated. Come back on Monday for Trading with Sergio, Tuesday elections. My DJT position will definitely, well, something will happen to it. It'll probably expire worthless, but I don't know. We will have new president-elect by 10 p.m. Pacific time on Tuesday. Well, either way, new president-elect, right? Biden is not it, so we'll see how it goes. Much love. Be safe out there. Hope you had a good Halloween, and I will see you guys on Monday for Trading with Sergio. Please thumbs up. Please consider subscribing. Please share. And if you do become a member, you get a shirt for free on top of my smiling face every 2 weeks. You too. Be well, stay healthy, stay safe.